Hello, everyone. 8% of your assets under management in Tesla at this point, yeah, because it went up 20 times in the past 2 or 3 years. If you might remember when I was on initially, and I was describing the investment, I said I thought we would make 20 times our money in this investment. And what do you know? Well, we invested $380 million, and up between 2014 and 2016, average price was then about $40 a share, and we've made about $1 billion, about 20 times so far. So we made about $6 billion. So far, we sold about $1 billion worth of stock just because you didn't want it to be an even bigger position in the portfolio. And yes, well, what it was is that I was getting widely criticized for having such a large percentage of my assets in two of our mutual funds, Barron Partners Fund and Barron Focus Growth Fund, in one stock. And people said, "How can you be so crazy?" And so I wanted him to think I wasn't crazy. I know I'm crazy. That plan was making $115 million a year, or $15 billion a year on a $7 billion investment. A normal industrial company would make 15% on capital, and the most they'd make was 20%. This guy's making $8 billion in a $7 billion plan, so he's the lowest cost person in the business. Everything about it is going to drive prices down. In the early 1900s, automobile companies were great innovators. That's not the case anymore. In the 1950s, they decided to go for profit, and they outsourced all of their supply chain, which hurt them. Hundreds of these companies went bankrupt, and all of them went out of business. Now, their electric cars drive about 30 million miles a day, and they're collecting data from 100 million miles. Barron, who is known for his risky and visionary investing strategies, recently made some predictions that have changed the game and made the financial world go crazy. Come along with us as we break down Barron's newest ideas, which will amaze even the most experienced investors. Barron's pearls of wisdom will be mined from every angle, from his groundbreaking predictions for Tesla's future to his astute views on the bigger picture of the economy. Get your favorite drink. Whether you're an experienced investor or just starting to learn about money, grab your favorite chair and get ready to be captivated. You won't want to miss a second of this exciting conversation. Get ready to be moved, educated, and maybe even a little shocked. Welcome to Tesla Stock News, where you can see the future of finance happen right in front of your eyes. But before we start, don't forget to hit the like and subscribe buttons. Without further ado, let's take a deep dive into the world of possibilities with Ron Barron as our guide. Ron Barron draws a vivid picture by comparing the search for the next big thing to Tesla's breakthrough work. Could there be another player or a different field? Barron says that the potential for this company to eclipse Tesla's legacy in the 2030s is huge. Imagine a world where this company's impact is even greater than Tesla's. This kind of company is hard to find, just like Tesla was when it first started making electric cars. Barron says that the arrival of autonomous driving could completely change our daily lives. Imagine that owning a Tesla is more than just buying a car. It's also investing in a lifestyle where your car can navigate itself, a service worth about $2,000 a year. Imagine waking up in the morning and stepping into your Tesla and starting your daily commute without touching the steering wheel. This isn't just a fantasy from the future. Barron thinks it will become commonplace sooner than we think. With autonomous driving features built into Tesla vehicles, owning a car goes beyond just getting around. It becomes an investment in a way of life that is defined by comfort, safety, and efficiency. Barron thinks that Tesla could make 15 to 20 million cars a year within the next 7 to 8 years. And here's the catch, as Barron puts it. Think about a world where a lot of cars on the road, maybe even a fifth or a quarter, can drive themselves thanks to Tesla's technology. Now let's talk about risk and reward. Barron goes into great detail about how to put a lot of money into not only companies but also the idea of one person, Elon Musk. It might seem like a risk, but Barron shows how dedicated and visionary Elon is. Elon surrounds himself with the best people, as Barron says. For example, the head of computing's rise from humble beginnings to the forefront of technological innovation is similar to Barron's own path at Tesla. The Earth and Elon Foster, where Barron explains that brilliance grows in workplaces where every worker is not only successful but also driven by a shared mission. He's shaping the future of transportation and beyond, one innovation at a time. Barron thinks it's a good bet. So as we look into the future, Let's remember that the next Tesla could be coming soon, led by a visionary like no other. As Ron Barron so eloquently explains, if you graduate from a top engineering school, you might be set on landing a job at either SpaceX or Tesla because you want to work with other brilliant minds on a mission that really matters, something you believe will shape the future. Barron points out 3.5 million people applied for just 30,000 jobs at SpaceX and Tesla last year, which is a huge number. As he points out, getting a job at these companies is harder than getting into Harvard. But those who do get hired are driven by a common goal or mission, which is what keeps them going. What are the risks? Barron admits that there is a risk, especially when the company is small, but as these companies grow, he's betting that they'll not only survive but thrive. He's sure that Elon Musk will continue to lead the way for at least the next 5 to 10 years, and it's a bet he's willing to make. Barron then shifts gears and thinks about the current state of the world, where geopolitical tensions are rising and worries about the U.S. budget. Some people might question whether or not it's smart to own stocks, but Barron's view is based on his own experiences. He talks about how he started out as an analyst in the 1970s with only $600 and bad credit, and he even tells a funny story about how he got calls without a phone while working with hedge funds. Tales of Paul teach Jones. Barron recognizes Jones's skill at market timing, but stresses that they have different investment philosophies. Jones is a trader, while Barron is an investor with a long-term view. He draws comparisons between today's problems and the turbulent 1960s, reminding viewers that despite the chaos, economic growth continued. Barron's outlook is one of cautious optimism. Despite the uncertainties, he remains bullish on the potential of the stock market and the economy, based on his belief in innovation and resilience. This view is the result of decades of experience and a deep understanding of how markets work. But do you know who else shares Tesla's optimism? That would be today's sponsor. For Tesla bulls and people who are always on the lookout for the next big thing in the stock market, Seeking Alpha's impressive growth isn't just something to watch from the sides. Seeking Alpha has everything you need to know about Tesla. Tesla stock price goals, Tesla's new ideas, and everything. Elon Musk avoids the negative talk about Tesla in the mainstream media. Seeking Alpha has the most pro-Tesla news on the internet. If you click on one of the affiliate links in the description and make a purchase, our channel may get a small fee. Thanks for your support. Going back to the subject, Ron Barron's study of the economy takes us on an interesting journey through time, comparing the present to the past to reveal important information about the future of the stock market. As Barron delves into the numbers, he points out the incredible growth of the Dow Jones, which has increased in value 34 times since the 1960s. This exponential growth, he explains, means that the stock market grows by about 7% each year, which is faster than inflation by about 2%. But what does this mean in real life? To put it into real-world terms, let's say you put $11,000 into the stock market in the 1960s. Today, that same investment would have grown to a huge $334,000 thanks to the consistently rising market. Barron says that this amazing compounding effect is the key to the stock market's long-term success. Now let's talk about the elephant in the room, the problems and unknowns that will surely come up along the way, like pandemics, wars, and economic downturns. There are some bumps in the road to financial success, but Barron points out an interesting trend: the market's ability to bounce back from losses. Barron tells us that the market has an amazing ability to bounce back, doubling in value every 14 or 15 years on average. But why does this matter? It matters because it shows how important it is to invest with a long-term view, since short-term changes can cause stress and uncertainty. Barron's ideas tell us to keep our eyes on the bigger picture. If we can weather the storms and stay invested for the long haul, we will be able to benefit from the market's steady growth path.